Real-world asset tokenization is set to reach $10 trillion by the year 2030. In today's video, we're going to be talking everything about tokenization of assets with blockchain technology, looking at some of the projects that are paving the way towards this $10 trillion market over the next 6 to 7 years. But as always, before we jump into the details of the video, please drop a subscribe below, hit the notification icon and give this video a thumbs up so that you can stay in the loop on all the latest crypto updates and hit your crypto goals. So, asset tokenization, what are we referring to? Well, if we take a look at what we mean by asset tokenization, this essentially is breaking down the real world assets that we use today from a retail level, but also from an institutional level, and thinking about how we can tokenize those assets to represent ownership of them on the blockchain so that everything is much more efficient, everything is much more scalable, and also a lot more transparent in terms of how assets are owned, shared, distributed, and sold. So some of the assets that we're talking about here are things like art, antiques, land, technology, commodities like gold, mining of other commodities like, zinc, copper, silver, and obviously real estate is another huge one. So this visual here in front of us, we're just representing some of the different types of real world assets that we're beginning to see tokenization of. And over the coming years, the value of the assets that will be tokenized as we move towards 2030 is set to reach $10 trillion and beyond, as we'll dive into in a couple of minutes. So before we jump into some of the other details, it's worth noting that even with the Bitcoin spot ETF approval in the past few days, many asset managers like Larry Fink, the CEO of BlackRock, believe that the ETFs are just a stepping stone towards a world that is much more tokenized, where assets are owned and distributed in a much more tokenized fashion. And we'll look at some of the benefits of those in a moment, but quickly, let's just hear what Larry Fink had to say about this just a few days ago, immediately after the Bitcoin spot ETF approval. Let's hear what he had to say about asset tokenization over the coming years.
Let me be clear. I think ETFs are step one in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset. And to me, this is where we believe it's going. So we're looking at Bitcoin, we're looking at ETFs in the same manner. These are technological changes that can allow us to move forward. I see value in having an Ethereum ETF. As I said, these are just stepping stones towards tokenization. And I really do believe this is where we're going to be going. We have the technology to tokenize today. If you want to think about this. If you had a tokenized security and you have a tokenized identity, you, Andrew, the moment you buy or sell an instrument, it is known. It's on a general ledger that is all created together. You want to talk about issues around money laundering and all that. This eliminates all corruption by having a tokenized system.
Okay, so obviously based on everything Larry's saying here, it's very clear that, a number of the projects that we're going to look at today are obviously paving a road towards greater tokenization and, creating the infrastructure that allows for this tokenization to happen with different on-chain events, smart contracts, real-world oracles, etc. But it's very clear that the institutional money and the institutional players are very much aware of this future as well and are obviously heavily invested in it as per the words that came out of Larry's mouth a few minutes ago. So there's no secrets here. It's very much being, written on the wall in terms of the future that we're moving towards in terms of asset tokenization. So how can you capitalize on this as we move forward? So, this chart here is just a breakdown from one of the larger consulting firms that's showing us asset tokenization estimates over the coming years towards 2030, breaking down the different types of assets that will be tokenized and how that's going to scale from, even from 2022 up towards 2030. The estimates here being in excess of $16 trillion by the year 2030, broken down into a lot of home equity, a lot of bonds and other debt being tokenized over the course of the next 7 years. And this other chart from Roland Berger, another global consulting firm, echoes a lot of the same sentiment, where they're estimating that the value of tokenized assets will reach at least 10.9 trillion by the year 2030, with real estate, debt, and investment funds being the top 3 tokenized assets. So again, seeing this scale up from 2023 all the way towards 2030, with tokenized allocation coming from all these different areas like real estate, debt, investment funds, infrastructure, private equity, public equity. Again, they're estimating that real estate, debt, and investment funds will make up the top 3 tokenized assets. And it's super interesting to think about how the institutions have really latched onto this idea of tokenization and how it's really starting to take effect, and what we're going to see over the next few years, especially with the next couple of bull cycles, with the 2024 Bitcoin halving, the 2028 Bitcoin halving, all happening before the year 2030, and how those supply shock events will also play into the market as a whole, continuing to evolve and grow towards more asset tokenization. So what are some of the benefits of asset tokenization? I think, we hear these terms being thrown around, but what it really means is more accessibility for retail investors through fractional ownership. So as per the examples we gave above, with some things like, land, maybe fine arts, but especially real estate, as we'll see in a moment, the tokenization of these assets allows for retail investors to, be able to invest as little as a few hundred or a few $1,000s to have a stake in those assets, to own a piece of those assets, and use those as investments to gain a return over a period of time when they own those assets, where previously maybe a lot of these assets would only have been accessible to people who had the capital to do so, the capital put a down payment on a property, or the capital to pay for an entire real estate investment in cash, or having the credit history to do something like that. So it opens up the investment opportunities for retail investors and institutional investors, even more so through fractional ownership, increased liquidity in global opportunities. It's opening up the market to a much larger inflow of capital, just as we saw with the Bitcoin spot ETF approval. That now opens up the market to a much larger inflow of capital from institutional investors. So too does asset tokenization open up the floodgates for more and more retail and institutional investors to be able to own, fractional pieces of different assets through tokenization with blockchain technology and with smart contracts. And not only this, but huge efficiencies are achieved with asset tokenization on blockchain technology. Obviously, we know the basics with blockchain technology being that it is tamper-proof, it is transparent, and it allows for huge efficiencies of scale, where this was simply not possible before, to have assets tokenized in such a fractional manner, but this new technology allows us to do so. So there are obviously some of the benefits of asset tokenization, what's happening, but let's just look at a couple of examples. So real estate, if you remember, is one of the top 3 areas estimated to be the largest inflow for tokenized assets by 2030. So two examples here, Homebase and Lofty, are fractional real estate investment vehicles powered by blockchain technology, where as an investor, whether you're institutional or retail, you can invest in real estate for as little as $100 or for as little as a few $100s to own a fraction of a real estate investment and gain a return on investment over that period of time where you hold it. So completely opening up the opportunity here for retail and institutional investors, as we've said. Other examples for tokenized capital and debt market investment, like Maple Finance, opening up the whole realm of DeFi and decentralized finance. You can look at maple.finance on their website yourself, but obviously being able to tokenize different capital and debt markets, being able to offer people the ability to earn a return by, lending money or taking out loans is a huge market in terms of traditional finance. And when we see the tokenization of this happening with decentralized finance, that's what Maple and other similar businesses are betting on over the next few years. And again, seeing the example of debt being one of the top 3 areas for tokenization by 2030, that's exactly what Maple Finance are tackling. And not only that, but also government and treasury bonds, tokenized debt in the form of treasury bonds. US treasuries, we're seeing moves being made for the tokenization of US treasury bonds, as well as in Europe, the European Investment Bank issuing 150 million euros worth of tokenized bonds in 2023. So we're very early in the early days of the growth in terms of asset tokenization. But I think getting in on the ground floor here is an opportunity not just for institutions and traditional asset managers, but for you as someone who wants to take control of your finances and your financial future. What's actually happening on the back end here? Like projects like Lofty that we just mentioned, blockchains like Algorand are facilitating and building the infrastructure to make this happen. Similarly with Chainlink are building the infrastructure to allow for tokenization of assets on the blockchain, and their development with oracles to connect real-world data to on-chain events is something that they've been building out for a number of years now. So, how do we go from this to this? We need the infrastructure to do it. We need the infrastructure and the blockchains that power all of these transactions for on-chain tokenization of assets to be built out. And they are being built out. They have been being built out. And what happens now is we scale. And as we scale, the winners of the blockchain wars, let's call it, are the ones who have built out proper utility, who have built out the infrastructure to allow for these assets to be tokenized in a way that is scalable. And two examples like Algorand and Chainlink are just a couple of the examples that we've looked at here. But obviously, with there being over 20,000 cryptocurrencies, at the moment on CoinMarketCap, obviously not all of them are going to survive. But if you can understand the utility and understand what's actually happening here and the future that institutions are getting behind, and the infrastructure that's being built by these high quality blockchains and cryptos, you can see the path. It's very clear where we're going. So that's the main point that I wanted to get across in this video in terms of asset tokenization and the potential there for growth over the next few years as we move towards the year 2030. It'll be very interesting to see what kind of numbers we're hitting in terms of tokenized asset market share by the year 2030. Are we going to surpass 10 trillion? Are we going to be below it? Are we going to, be at something closer to maybe 20, 30, 50 trillion? It'll be super interesting to see, and super interesting to see who are the winners in terms of the blockchains powering the infrastructure to make this happen. So, as always, if you enjoy these videos, please drop a like below, leave a thumbs up, hit the bell notification icon, and make sure you're subscribed to stay up to date with all the crypto news and hit your crypto goals.